Wall Street has long been skeptical of Tesla, only grudgingly acknowledging them as more than just a car company nowadays. But let's face it, those suits are often as short-sighted as a mole with cataracts, obsessing over the next quarter's result like it's the be-all and end-all. But with the unveiling of the RoboTaxi event, Tesla is about to flip the transportation industry on its head in ways that'll make those traditional analyst heads spin faster than, I don't know what, a RoboTaxi's wheels. Now, maybe you're thinking, Felix, how big a deal is this RoboTaxi business really? Well, what if I told you it's going to generate more revenue than Uber's entire operation? Are you intrigued yet? Well, in today's video, we're going to dive deep into the numbers. We're going to dissect Wall Street's predictions. I've got the actual predictions from the biggest Wall Street investment banks out there. And we're going to uncover why Tesla's RoboTaxi service could be the golden Willy Wonka ticket that transforms not just that company, but the entire transportation industry and certainly my portfolio with it. We're talking numbers, we're talking price targets, the whole shebang. And speaking of golden Willy Wonka tickets, it really is a shame that that's no longer like socially acceptable, right? What's wrong with putting someone very large and purple through a juicer to get them slimmer? Is that really offensive? I thought it was rather good. Anyway, if you want to learn how to spot stock breakouts before they actually happen, and look at this chart here. Tesla broke out on April 24th, 30th of April 24th. That's when we called it a buy. That was the real breakout. And yeah, it went sideways a bit after that, but that's what triggered the real rally up. And if you bought then at 180, you'd still be looking very sweet at $218. And if you want to know how we spot those, because there is a rule to it that Wall Street follows, then I've got something very exciting to share with you. I've recorded a 30-minute masterclass. That's a combination of everything I learned as a banker and as a trader for the last decade. And it's the same strategies that helped me achieve financial freedom. And in this masterclass, I'm going to reveal the simple 4-part protocol I use to consistently spot these breakouts and outperform. I know it sounds too good to be true, and most people won't watch it, and that's okay. They continue to struggle. I'll do my best to convince them, but, you know, I can't help everybody. But to learn this, you don't need to know any experience. You don't need to know anything at all. You can be a complete beginner, and all you got to do is follow the system, follow the rules, and you'll start spotting those breakouts too, and they'll make all the freaking difference. So I'm only going to put that masterclass up for a little while, and once you watch it, you'll realize why. Go to felixfriends.org/get-free, watch it, and learn my exact method for spotting winning stocks before they become winners. But my real intention with this video is to make you rethink everything you thought you knew about Tesla, RoboTaxis, and just transport generally. So let's kick it off. To understand the opportunity, we need to understand ride-hailing, which is basically Uber, right? Nobody really competes with Uber. They are basically the Loch Ness monster in the pond that is ride-hailing. Difficult words. They dominate the US, 76% market share, so they own basically 3/4 of all the taxis in New York. You get the idea. But their reach extends far beyond the US. They're operating in 10,000 cities across 70 countries. That is more locations than my dear Winston has visited, and he's traveled a fair bit. But let's look at their numbers. In 2023, Uber's mobility segment, that's the giving people rides business, they raked in just under 20 billion in revenue, and they're not slowing down. In the first quarter this year, they already brought in 5.6 billion, so there looks to be breaking that 20 billion ceiling for the year. But mind-boggling numbers don't just stop here. In the first quarter, Uber facilitated 2.5 billion trips. B with a Biden B. You get the idea. If we annualize that, we're talking 10 billion trips a year. To put that into perspective, that's more trips than there are people on Earth. It's as if every single person decided to take an Uber ride and then take a second one. So why do I care? Why should you care when this is actually a Tesla video? Well, this is the market that Tesla's RoboTaxi service is poised to disrupt. And when I mean disrupt, I mean shake it up thoroughly. And 10 billion trips a year is a high bar. But I believe Tesla's RoboTaxi service has the potential to clear that bar and then some. So in the next segment, we're going to dissect Goldman Sachs's forecast. They are the really caring, fluffy, lovely investment bankers, the ones with the, fluffy hearts, those ones. And they have put a forecast out, which is going to blow your socks off. So let's put on our financial glasses and see what those lovely Wall Street wizards have come up with. They set a 12-month price target of $230. Now 90% of the audience leaves, but give me a few minutes, okay? That's a downside, right, of 3-4% from the price before the event. So what's up with that? Well, let's break down their projections. They're forecasting Tesla's revenue to grow from 96 billion to about 140 billion by 2026, which is pretty decent, 13% a year. You might think that's a good thing. They're also expecting EBITDA, which is sort of Charlie Munger loathed profit metric, to go from 16 to 29 billion, which again is crazily good, right? But they've also run the numbers on the Tesla RoboTaxi service. And honestly, I was like, wow, when I looked at those figures. So they have a conservative scenario, and then we have a bullish scenario, which is going to excite you just a little bit more. They're saying if Tesla just has 100,000 robotaxis out there, and they make 10 trips a day at, say, $25 a trip, we're looking at 9 billion revenue per year. Pretty good, right? But let's dream a little bit bigger. The moderate scenario, 500,000 robotaxis making 15 trips a day. We're talking 68 billion annual revenue. That's more than 3 times Uber's annual revenue right now. Right? Now look up Uber's share price. But what if we had 1 million robotaxis and they made 20 trips a day? Well, Goldman Sachs calculates that would bring in 182 billion in annual revenue. And that is really turning the industry upside down. And you're thinking, but Felix, operating costs, but you have all the revenue. Well, this is where Tesla's ace up the sleeves come in, cost efficiency and scalability. Goldman Sachs shows that Tesla's manufacturing expertise isn't just about making pretty cars. It's about driving down costs faster than Winston chases after a tennis ball, and he's pretty quick. They're saying once they sort of get to about 70,000 vehicles, the cost per mile drops to about $1. And Elon actually made a case that it's going to drop to about 20 cents. And yeah, that might take a little bit of time, but Tesla is going to enter this game of ride-hailing with a much, much lower cost basis than Uber or any other competitor out there. So why the heck does Goldman then put a $232 price target out? Well, analysts are like sheep. They don't ever really want to be that far out, especially if they work in an investment bank. They sort of look at being, $10, $20 above the current share price, and that way they're not going to get fired. That's basically the way they think. So why am I so bullish on this? Is it because Cathie Wood of ARK Invest is very optimistic? Well, she argues that Tesla's vertical integration and AI capabilities give it an edge that's incredibly sharp, and is projecting that robotaxis could add and drive Tesla's valuation to $4,000 per share by 2026. You see, I'm conservative, which is, yeah, that's something. Her reasoning, well, Tesla's massive fleet of vehicles on the road, she's saying it's like a giant vacuum cleaner sucking up data faster than you can say full self-driving. And this data advantage, she believes, will turbocharge the autonomous driving, and everyone else is going to have to pay them, I suppose. If you go to the other end of the spectrum, I mean, really, the spectrum, you get what I'm saying? Gordon Johnson of GLJ Research is waving the bear flag so hard you think he was trying to, I don't know, scare away a bear. And he's saying it's never going to work. It'll never work. No, it won't. They won't be able, the wheels will come off the bloody thing, and the competition from established car makers will erode Tesla's advantage. Is he talking about General Motors and Ford and Toyota? Really? Anyway, so those are the crazies out there. In the middle, you've got Adam Jonas from Morgan Stanley. I warned you there'd be lots of investment bankers in this video. And he's sort of trying to find the Goldilocks zone, not to Cathie, not to Gordon. And he says there's a potential of robotaxis, but he takes a more measured approach. He's basically saying, yeah, there is gold in the hills, but let's not forget about the pickaxes and the shovels we need to get there. He suggests that Tesla's robotaxi business could be worth $500 billion, which is not bad. But he's not getting as carried away as maybe Cathie might be. So there we got 3 different flavors of forecasting. Now the question is, which flavor will leave the best taste in our mouths? Time will of course tell, but one thing's for certain. Tesla's RoboTaxi plans have caused some excitement and also seem to have pissed off a lot of people. I get a lot of very angry messages when I say to people, this is brilliant, this is amazing, this is going to work. They're all saying, no, it won't. And there's a poll out last week which basically said 70% of people are scared of autonomous driving. They think it's going to kill everybody. It's going to run people over. And of course, the opposite is true. Right? They'll be a lot safer than humans because they won't text and they won't be distracted and they won't be annoyed about the YouTube video that they just watched and they want to leave a nasty comment on and that kind of thing. And therefore, they will just cause a lot less accidents. That's very, very clear. But it brings us, of course, to the regulatory hurdles. Everyone always brings that up, saying, regulation, it'll never happen. No, the government will never approve it. Well, look at Waymo. You know, they put those funny little cameras on an existing car and they got permits for that in California and Texas. So why the heck wouldn't Tesla get them? Tesla's going to get them. It'll take time. It'll be state by state and it'll be small areas and then bigger areas and so on. But it'll happen. And what will be the outcome? They'll no longer be selling cars. They'll be selling rides. And that's like going from selling CDs. Remember record shops? Remember those things? I used to love record shops. And now selling Spotify subscriptions. Who do you think is making more money? Well, recurring revenue is the holy grail of business models for Wall Street and for investors. And guess what? These robotaxis won't be sitting in a garage somewhere for 22 hours a day like your average car. They'll be out there hustling 24/7, earning their keep like a workaholic. And every mile the robotaxis drive is another byte of valuable data for Tesla's AI. So it's kind of like having millions of unpaid interns constantly improving your product. If you are an unpaid intern, I'm sorry. I used to be an unpaid intern. It's just sort of a passage of life thing, isn't it? You hopefully learn something. If you're just getting coffee, go somewhere else where you actually need it. So what about disruption? If Tesla pulls this off, aren't they going to shake up the whole car industry and turn it upside down? Yeah, because traditional car makers might find themselves as relevant as the horse and buggy producers. Okay, buggy producers and horse breeders. Because ride-hailing services and self-driving cars will be just that much better. Now, there'll be some exceptions. Ferrari. People are still going to want to drive a Ferrari because that's the whole fun of the thing. You don't sit in a Ferrari to get from A to B. But pretty much everybody else is just making stuff to get you from A to B. Now, I know we've all been conditioned by ads to think that it's a masculine thing to drive and so on. But most driving, let's face it, it's going from home to work to home, which isn't really all that exciting, is it? It'd be much nicer to have a nap. So what about ride-hailing services like Uber and Lyft? They could be looking at Tesla in their rearview mirror and objects maybe a little closer than they appear. But I actually think that Uber will do quite well out of this. I think Uber will be run largely on Teslas because Uber drivers will buy robotaxis, what Elon mentioned. And yes, they'll get a loan for them, obviously, from Tesla's finance department. So they'll pay them off by having the cars on the road, earning their keep, and then they'll manage bigger and bigger fleets, and that'll be the future of Uber. Because let's face it, being an Uber driver isn't the most rewarding thing in the world, is it? They do it for the money. And then there is even public transportation, which is going to feel the heat, because why wait for a bus when a robo-van can whisk you away at the tap of an app? Much better, right? So what does it all mean for you and me? Well, I think it's like being offered a ticket on the maiden voyage of the what is it, Starship Enterprise or something? I used to watch it as a kid. Crazy potential. So is there a risk it isn't going to work out? Yeah, of course there is, like with any investment. But did you see Elon landing that 250-ton rocket between two little chopsticks over the weekend? That was pretty crazy. So I think they can pull that off. I think they can get robotaxis on the road. So with all that said, we're going to forecast Tesla's stock price. And let me tell you, that's hopefully the exciting part here. So how do we do it? Step one, base camp. Let's lay out our starting point. As of October, 11th or something like that, Tesla's stock price is sitting at about 218, something like that. PE ratio is 61. Net income margin is 30. Revenue this year is about $100 billion. Step two, get your crystal ball out. Winston ate mine, so I'm going to have to do it without. we come up with some educated predictions of the future. We're assuming that Tesla is going to benefit from large-scale production in the AI boom. We're projecting an annual average revenue growth of 30% in the first 2 years, followed by a huge boom around 2026, 2027, due to finally achieving large-scale production of RoboTaxis, because that's when they're going to come, hopefully in 2027. Income margins will improve to about 17%. Simply because large fleets are cheaper to run, as Goldman Sachs suggests. And PE ratio will be, we're going to look at 60, 80, and 100. And I know these PE ratios seem high, but remember, Tesla's historical PE ratio seems that, or suggests rather, that these aren't really out of this world. And then step 3, RoboTaxi revolution. So we're going to factor in here Tesla's RoboTaxi potential and look at a realistic scenario. By 2026, we might have 100,000 RoboTaxis. That's probably bullish. I would probably say by the end of 2027. And say they serve 12 trips a day, $25 revenue. That's an extra 10 or 11 billion in revenue. But where it gets more interesting, fast forward to 2029, we're talking about 1 million RoboTaxis, each making 20 trips a day at $25 a pop. That's now 182 billion in annual revenue. I know it's a lot of numbers. We'll try to put it on the screen for you. But let's break it down by year. So 2026, we're looking at, and I'm going to run you through here the calculation and then give you the final number. So we're looking at an earnings per share of just under $7 with a PE of 60. So you multiply that with the 60 and you get to $400 and a bit. At a PE of 80, you get to $550. At a PE of 100, you get to just under $700. Nice, right? 2027, PE jumps up to 1044. Let's run through our 3 scenarios. PE of 60, $626 price target. Our mid case, $830. Our bull case, $1,000 plus. I'm going to skip 2028 here just to make your head not explode and look to jump straight through 2029. Same story. PE of 60, $1,100 share price. PE of 80, $1,500 share price. PE of 100, just under $2,000. And we're starting at about $217 or $18 or something right here. And our most optimistic scenario would take us to just under $2,000. That's about 10x in 5 years. So by 2028, RoboTaxi service could become Tesla's main revenue driver, potentially justifying these eye-watering projections. Now note, I didn't include a single robot. I didn't include a single bit of AI revenue from anything else. I'm not saying anyone else is using FSD. I'm not saying the energy business has done anything useful. And so therefore, I think actually the projection isn't as crazy as you might think. Because at scale, Tesla's RoboTaxis could operate at a fraction of the current cost per mile. Elon said 20 cents. Now, Elon's a bit of an optimist, so maybe it's going to be a little bit higher than that. But you're basically going to get a 5-star Uber ride at rickshaw prices. So therefore, how would we trade Tesla? Well, buy and hold is one thing that works. I'm not a huge fan of the thing, and I'll tell you why. If you go to tradevision.io, which is a software that we built to give you the same quality data that Wall Street has access to, then type in Tesla, as I've just done here. And say you look at from the beginning of 2022, which is somewhere up here, somewhere there, to where we are right now, well, we're down 44%. Buy and hold is lovely, isn't it? If you traded it the way our little algorithm says green here and then red there, that's the idea, you'd be up 81%. Of course, past performance isn't a promise of future performance and so on, but you might want to get yourself a free week's trial to tradevision.io. I'll put the link down below as well. So what do I look for? Well, I look out for breakouts, and we haven't got one yet. I think we are going to get one. What do I need to see for that? Well, really watch that masterclass. That's really what's going to give you the proper details there, so I don't have to spend 30 minutes explaining it. But we're going to want to break through here the sort of 225. We're going to see a lot of volume to do that with, and get some real momentum going there. And that's essentially what it is. The market is a momentum beast. You break out, you go a little, consolidate a little bit, you break out again, you consolidate, you come down, and you break out again, and then you consolidate, and you repeat in the process. The same 4 things happen again and again and again. And if you understand those patterns, I think you could potentially do a lot better than buy and hold. That's my thought process on that. So check it out, felixprehn.org/get-free if you want to learn those real rules. But I think right now is a teeny tiny touch early, because what's the risk of having money tied up in a stock that isn't performing? Okay, in the long run, you'd be all right with the stock probably. But in that interim period, that money could work harder in something else. And that's what I look at. I look at how do I allocate my money in the most efficient way possible to get the maximum return, because that's why I do this, right? Why do I invest? I do this. Now, you might be wondering, so why the heck are you making this YouTube video? Because it's fun, my friends. It's actually really fun. I really enjoy it. And when the whole COVID thing kicked off, and I was just sitting at home trading by myself, like, it was just boring. It was just kind of lonely, to be honest. So now we've got this very cool community of 10,000 plus people, and it's very social, and it's really lovely. It's really nice, and I've got lots of nice people to talk to, and I think it helps a lot of people. That's really what the whole point is about. So, final words on Tesla. I think it has the potential to revolutionize the entire transport industry, put a lot of car companies out of business, and make life a heck of a lot better. And I think that's really what people are scared of, the change, right? People don't like change, but you know what? Change is actually good. And sometimes it feels uncomfortable in the moment, and you don't want to give up your steering wheel and all that. I get that. It's not going to be illegal. Just get yourself a little sports car and have fun with that, or whatever it is you drive for fun. And then for those boring journeys where you go all the time, you're going to just sit back, relax, cuddle your dog, or have a snack, have a nap, do some work, do some trading. So on that note, check out felixprehn.org/get-free. Watch my little masterclass there. Really a lot of stuff jammed packed into that 30 minutes. And I thank you for watching. If you got some value out of this video, share it with a friend. Maybe we'll do a little bit to turn around the rather nasty sentiment on Tesla at the moment. And I wish you great success. All the best. Tom Lee has just released his top stock picks for October. Top 5 stocks that he absolutely loves. And in fairness to the chap, he has been consistently ahead of the curve.